What's going on? How you doing, Gravinder, Ricky, Ginger? How you guys doing today? Hope you guys had a good day. It's a pretty boring day for me. Tried an IWM put scalp this morning, didn't work. I didn't want to step in front of the train anymore, so just left it alone. It was all in all, it's a pretty boring day. Clear trend. It was just obviously we're just slowly grinding up. At the very end of the day there, we kind of broke below the trend, obviously. I did expect some selling at the end of the day because of the CPI print tomorrow. But not enough conviction for me personally to take anything at the end of the day. I already have enough puts. What's up, G Money? How you doing? Super boring for me, obviously. Again, sometimes. So one thing you guys do know, MSL, we swing both long and push short, right? So bull market, bear market, doesn't matter. What's up, Carlos? How you doing? It doesn't matter. But one thing you have to realize when you're trading, one thing I really want to go over today is the difference between bull trading and bear trading. In bull trading, it's very easy if your calls go red, you can just cut them right away. So the thing with puts is it's very, very hard to time a put or a short perfectly. You might have to sit through a day or two of pain here and there. Whereas longs, if you're right, it just goes up right away. If you're wrong, then you can cut it right away. That's why less people are good at shorting and most people prefer to go long. But the thing with puts is, so imagine you were short from here and you had March 18 puts, right? February 25th, you're short, right? You buy the top here. For 3 days, they just crushed your premium. Like, that's all that happened. We went completely sideways. They crushed your premium for 3 days. Some people got squeezed out right here as soon as they take out the high. And then within 4 days on SPY, your puts went 800, 900%. So that's the thing. You have to realize what you're trading, what you're doing. If you're bearish, like right now, I'm holding puts, right? So I had to adjust. Instead of just being like, oh, this is my stop loss, this is my this, I take smaller positions and just let it ride out. So the thing is, just know what you're doing. It's completely different trading puts to calls. The scenarios are completely different. Even today, like you see this bounce, like if you look at a 1 day intraday chart, let's open up SPY here for you guys. If you look at this one day intraday chart, you're just gonna say it's grinding higher, it's taking out all these resistances, right? But then when you zoom out to the hourly, for example, like this is just clearly barely even taking out March 8th high. We're just sitting around March 8th high and we closed below there, right? So it's all about time frame. It's all about all of the puts that I've called out are either March 18th or April 14th. So we have a month, more than a month on most of them. And if you zoom out, I mean, it's the same pattern over and over again. So big dump off. We're at the 4-hour chart now. I told you guys about the RSI. Every time the RSI on the 4-hour is almost oversold, there's always a huge bounce. Well, 99% of the time. You even have these arrows here from yesterday still. See this big dump, we got the RSI oversold. We got the bounce. It was a pretty significant bounce. But if you held your puts that were 2 months out, you'd probably be green on them by the end of this. Like not even close to your expiry. So the same thing kind of applies. You might have to sit through some red days, especially in puts. Obviously, it's hard to time it perfectly, but any day, big flush and your puts go 300, 400%. So it's completely different. You see this big dump here, and then just because the RSI was oversold, it's not like the news changed or anything on February 24th. That's actually when they invaded Ukraine. Just because the 4 hours oversold, we bounced, we balanced, and sellers took back over. We did not take out those lows, which is kind of bullish. But on the other hand, I mean, we've cooled off the RSI with today's move. There's two things that can happen now. Either the bears can step on the gas and we can get one more leg higher into an equilibrium, or the bears can step on the gas and we come and retest these lows tomorrow and the following days. I'm leaning towards sellers just because there's a CPI number tomorrow, there's FOMC tomorrow, next week, there's OPEX next week, so I'm leaning towards more sellers. But let's see what happens, and don't worry too much. If you're properly sized, you won't be too worried about puts being red. Same kind of thing on QQQ. I mean, same pattern. Everything is exactly the same. We got our little 4-hour bounce here. RSI was oversold. Just like I said, RSI was oversold yesterday. We got our little bounce, cooled off the RSI. And if you look even last time, to draw a trend line here, the RSI gets up to around 56. Today, the RSI at the close was around 51 at the close, and at a couple points we hit over 51 here today. So I'm not saying exactly we're gonna stop at 56 on the RSI, but if you see every single 4-hour bounce on the QQQ, even this one right here, the RSI only got to around the mid 50s, and right now we're at maybe 51, 52. So what I'm saying tomorrow is, if we gap up tomorrow, I think they're gonna sell it off. If we gap down tomorrow, they might buy the dip. That's all I'm saying. Why do I say that? Just because the RSI has cooled off from the 4-hour time frame, and tomorrow morning's CPI number is obviously very important. Let's see where we open. Gap down, I would probably get rid of a lot of my puts. Gap up, I will hold my puts. Just my game plan right now. XLF, big sell-off at the end of the day, high volume. Definitely looked like one of the weaker sectors today. If you look at the daily candle close, we did bounce nice. I mean, we gapped up. Yesterday's close was around 35.66. Today we opened at 36.85. So more than $1 up on XLF is a big move on XLF. It's a slow-moving index. And how about a please, Danish? How about, like, can you go over shop chart, please? Or, you know, like, can you take a look at shop? Or I have a question about shop. But XLF big bounce up, but we closed near the low of the day. Looks like buyers, people took profits at the top of the day, and we closed near the low of the day. So not really too bullish here, anything on the daily. Again, IWM, same kind of thing. We didn't close that close to lows, but it looks a little bit better than XLF because it closed higher, closer to the higher day than the lower day. And we're still just range bound in IWM, 206.50 to 188. Until one of those breaks, we don't really have a clear direction in small caps. VIX here. So something I seen today for the first time in my life trading. VIX has I've never seen VIX spike like that and then drop right back down. I have no idea what this was. I don't know if it was an algo. I don't know if it was a whale pressing too big a buy button or whatever it was, but it didn't last long. So it's just a little blip you can ignore. At the end of the day there, what you need to notice on the VIX, you see that sell-off at the end of the day? Look at this trend line, guys. Every single bull seen the VIX down here, okay? Every single bull seen the VIX down here. They said, oh, VIX is going to break that trend line, right? Right at the end of the day, VIX pop. That little pop changes the whole daily trend. So you can argue with me. You can say it closed underneath, it closed over top, because you can't really tell on the daily, right? Even like the 4-hour shows that we did close a little underneath, but you can even adjust this line, guys. Like, look at the wicks. Like you were talking about the wicks. If it's that close, it's not reliable in my opinion. I can even draw another trend line right here just for the wicks. You see that? The wick, the body, the wick, and we closed above it. So remember that, guys. The VIX, that little move we had, that little sell-off at the end of the day, kept VIX above this trend line. So that means VIX had a cool-off period. And today the stochastics got down as well. So I do believe the VIX has more upside coming. Could be wrong, but let's see what happens tomorrow. Even if the 4-hour saved the trend line, the daily we saved the trend line, the weekly looks like it wants to go higher. Like, look at this. It's just slowly grinding up, and it might even take out this high here. 39 is the most important level now on VIX. That's just SPX 4300. Bitcoin looked good last night. We got some news from Helen or whatever her name is, Yeller. She said something good about crypto. They're supposed to impose some rules on it, but I guess it's not too serious. So everyone started buying crypto late at night last night. I jumped in some Matic here. And look at the volume that came in, guys. Huge volume, held the gap all day. Well, not gap, but held the run up all day and just completely sideways. So Bitcoin is correlating to the market, but used to follow Nasdaq. Now it's leading the Nasdaq. So if you look at Bitcoin right here, you can see QQQ kind of, or not QQQ. I gotta go to NQ. So you can look at the Nasdaq futures. We're kind of following Bitcoin now. So Bitcoin's kind of telling us what's going to happen before it happens. This is the 5-minute chart on NASDAQ. Same kind of thing. Same run up, and we just kind of grinded slowly all day. Bitcoin just made a huge pop last night, way more vertical, and then just kind of grinded higher all day. So keep an eye on Bitcoin for direction in the market as well. JPM, I absolutely hate this stock. I mean, I love taking puts on it, but look at this candle. This is not a good daily closing candle right here on JPM. This is an inverse hammer, like I told you guys. That means everyone took profits at the top here, or sellers pushed it down. So we are coming, it looks like we're coming right back down on JPM. Buying volume was lower than the selling volume for the last 3 days, which I love to see. Daily candle is ugly. We got a big gap yesterday. We opened at 129.64. If we get down to 129.64, those puts are in the money. They're already up big. So let's see where this one goes. I have a good track record with JPM puts, so let's see how it reacts. CCJ is one I called out yesterday. I said uranium names might get a bump because of Russia might be sanctioned. They're uranium companies. That's the exact news that came out today. And look at the volume that poured into CCJ right here. Almost the whole daily volume times 10 was that little 5-minute candle when that news came out. And look how it popped. Straight up 3%, 3.6%, and then just rose into the end of the day. I do think uranium companies have more to go. If you look at the daily and weekly charts, they look like they're just getting started. Yeah, so it looks like we're forming a big cup on CCJ, or you could call it an inverse head and shoulder here. Let's see where it goes from here. I do believe it goes higher. D-Dog was one I called out in the morning as well. If you paid attention, I said I like this one. Why? Very, very clean technical. Look at this. Previous resistance was right here around 121. 1, 2, and then once we broke through it, we've never gone below it again. So we came down, tested it once, came back up, came down, tested it again today, and then today was a 12.3% move. I hope someone caught it. Going to Tesla here. Tesla, same kind of thing. Tesla is kind of set up. If the market wants to get bullish, I think Tesla will run the most, as it usually does. So if you go on the weekly here, it's been holding this 50-day the whole time. 50-day moving average is now at 812. As long as we close Friday above 812, Tesla is still bullish in my opinion in the longer term. UPS, I know a lot of people were worried about these puts today. They are down quite a bit for me as well, guys. But this candle is disgusting, first of all. To have this kind of candle on a red day in the market, a green day in the market is not good. We closed below the 8-day moving average. We closed below the 21 and the 50-day moving average as well. So let's see tomorrow. If we get continued downside tomorrow, I have no doubt in my mind we'll go test yesterday's low and the February 24th low. If we have a green day tomorrow, I don't think we get above 213.80. And let's go into some of these charts now. We'll go into Danish's Shopify. So Shopify, I said there was a double bottom at 585 here. Very clear. The stock's down 60% on the year. From January 3rd till now, it's down 60%. It was a very clear bottom at February 24th, which a lot of the indexes and most stocks have not taken out. So you look at SPY, has not taken out its February 24th low right here. QQQ, same thing. XLF, same thing. IWM, same thing, I believe. February 24th low was 188.09. Yeah, 187.92. So none of the indexes have taken out that February 24th low, which is the invasion day low. Shopify was going towards it yesterday. I called out 2 days ago, actually. I said Shopify puts under 585 should work. It went under 585. It went all the way down to 511, guys. It was 76 points short. And today we bounced and we closed above 585. So if Shopify bounces another day, you're going to have to wait for it to break back down below 585 for puts. If you want calls, tomorrow might be a good day because it retook that previous low. So if Shop seems strong tomorrow, it might be good for calls as well. But again, guys, look at the volume. Look at the size of the bull volume compared to how much they were selling it yesterday. So take that into consideration. I'm not too bullish myself yet. We might get a 2-3 day bounce, but I think there is more downside to come, or at least more volatility. Here's BA. So BA had this huge range drawn out. As you well know, Bookie, I've shown you this range many times. The thing I see on BA, there's like always these weekly consolidations. So I used to trade BA in this big range right here for like almost every week of that year. Once it dropped down, I kind of forgot about it, but we got all the way down straight to $89 during COVID. Bounced up, we range bound the weeklies, like 7 weeks here, then rip up. Then we had like a 12-week consolidation, then rip up. Then like another 7 weeks consolidation, rip up. And now we've just been consolidating for like since March of 2021. So that's like 9, 10, 11 months, almost 1 full year in this little range. So what is it going to take for BA to break out of this range? And right now it looks like if we close Friday as we are right now, that means it saved the range, and BA, I would actually be leaning to the long side on BA if we close within this little range here. on Friday. If we break below, it's easy short. I think it could come way back down here, all the way down to 150s, 140s. If we break down from here, because this is almost a year-long consolidation, guys. So whichever way it breaks out of this range is going to be a powerful move. To the upside, I think it rips all the way to the 200 day, which is at 274. If to the downside, it comes down to like 150, 140. And if you don't believe me, just wait a couple months, you'll see. When the range breaks, whichever way it breaks, it'll be a powerful move. Other than that, UPS we already kind of went over. Can go over it some more. I mean, the weekly looks so beautiful after earnings. We had this beautiful inverse head and shoulders. We broke out, but it failed. It failed because of general market weakness. The earnings were great. The CEO is great. Everything's great. But we failed to break out, came back down, and now we're still underneath this. As long as UPS is under 213.80, that's very bearish for me, because it's a failed weekly breakout. So we have a lot of room to the downside. Another thing I like about UPS, even today, the indexes were green and UPS was a big red candle. Straight from open was at 209, close was at 206.78. The low of the day was 206.30. So not only did we open higher and close lower, we closed near the low of the day. HD we can do as well. Of course, Patrick, HD. So we got HD here. I got some fibs drawn here from some time ago. So just typical bear flag. Like, guys, I know, okay, so people get intimidated by like 5-minute, 15-minute charts, but if you zoom out to the daily, what on this chart tells me to go long? Absolutely nothing. Why? Because look at this. It's just, once we hit a top here around 418, 419, 420, what happened was we broke down. The bounce didn't quite get back to the previous high. So you can almost call this a double top here at the top. And then once we broke down, it's been bear flag. So you can't go straight down in a stock or straight up in a stock. You have to consolidate before the next move down. So we have big move down, consolidation, break down more. Then we have another consolidation or a bear flag, break down more, and then we have another. And what is this right now? It's just a bear flag that's breaking down. So it's the exact same pattern. So you want to take this measured move or you want to take this measured move, that should be what you get here. And HD right now should probably come down to the 786 fib, which is at 283. 283 would be a target if you're in longer term puts on HD. It looks like a bear flag is breaking down right now. Continued market weakness, I do think it breaks down much more. CYRN, sure, that'll be my last one today. I know nothing about the company at all, but I do know cybersecurity's been hot recently. So it looks like they had good earnings as well. A lot of volume came in, big move up. But this stock has made a huge move. It went 45% yesterday. Today's just an inside day. For it to go from $1.98 all the way to $13.37, you guys, that's a huge, huge move. And if you caught it down here, congratulations. If you didn't catch it down here, I would not touch it. So it's up 597% in the last 3 weeks. I don't see a play on this. I wouldn't short it. I wouldn't long it unless you know something about it being squeezed or something about it being a great company. Even if it's a great company, I would let it base for like at least 5-6 days. And then I would see the price action. How does it react to this earnings gap up? Does it come right back down? Does it keep ripping up? I would not chase this stock up here. If you got in at $1.98, congratulations. That's a trade of a lifetime. If you didn't, I would not chase it up here. But thank you guys for attending. I hope you had a good day. I'll see you tomorrow.